Oh man, did I make some trades today. Now I made several, but we're not going to talk about all of them. The ones I am going to talk about are the 2 leaps that I did do today and a sold put that I made some easy money on. Hello my friends, this is Legend. So today we're going to talk about a couple leaps that I did make today along with a sold put. So the leaps that I bought today was on NVDA and on IBM. So as you can see on NVDA, I did a 150 strike for November the 20th and I paid $48.90 per share for one contract. So therefore, that's $4,890 to open that NVIDIA leaps. Now I have out until mid-November for the expiration on this one, but I'm not planning on holding it that long. I'm really only looking to make some quick money. And the second one that I did open on a leaps here was the IBM at a 280 strike for mid-November as well. One contract, and I paid $4,145 on this one. So both of them were out to an expiration date of mid-November, and I did pay to open both of them as I bought that call in hopes that the stock moves back up. And then I can sell that call for hopefully more than I paid for it and keep the difference. So let's go take a look at the stock chart and let's take a look at why I got into NVIDIA and IBM just to better understand why. But before we do that, if you don't mind, hit that like button as it would be much appreciated. And now let's go check out the stock chart on NVIDIA. So here we are on the stock chart for NVIDIA. And today you can see that it just fell, right? And it's been coming down. But man, did it fall today. We opened at 186 and we went as low as around 176 and then closed at 180. So when we got down around that 180 mark, as you can see here, this orange line, that's the point where I wanted to try to get a leaps. So when it got down below that, I went ahead and I bought that leaps. Now, granted, it went on down, and wow, I could have got even a better strike had I only had that crystal ball to know that this one's going to go down to around 176, because I could have bought that leaps, and that would have only given me even more room that if it did move up, I can sell it for easy cash. But I'm good with where I'm at because that is the line that I had drawn in. And if we go take a look at the options chain, I'll show you what strike I selected and how much it's worth now. And here we are on the options chain. So when you open it up, you do see there are several different expiration dates. And the one that I did select, as I stated, was November the 20th of 2026. So let's open that one and we'll scroll right on down as I picked the 150 strike. Now, how much did I actually pay to open this one? And that was that $48.90 or a total of $4,890 as I was showing on that order form. And you can see currently it's worth $49.12. So if I were to sell it at this very moment, which I can't because this is after hours, but if the market was still open and I did sell it, I would make about 22 cents per share in just a matter of a few hours. Now, I'm not looking to make just 22 cents off of this one. I'm looking for this one to hopefully move back up to around that midpoint of the Bollinger Band and possibly back to the top of that Bollinger Band. And if we look back on that chart right here, you can see there's that Bollinger Band. We are at the bottom of it. I would love for this thing to move back up, get around that 190 area, and then turn around and sell it. So this could happen in a day. This could happen in a week. This could happen in a month. But at some point, I do need it to move back up. But with this huge drop, I just could not resist. Now, not only did I select it because it was at the bottom of the Bollinger Band, but I also selected it because of my orange line that I drew in, and this has been drawn in for a while. And as we scroll back, you can see there is a bit of support off of this line. And this is the same area that I had picked from the previous leaps that I had bought. And the previous one that I had bought was around November area. And then eventually I wrote it out and it started moving back up, and I did sell that NVIDIA leaps. And I can show you on my spreadsheet of what I made on that. But for the one I currently have, you can see it is right there on that support line, and it did actually come all the way down and touch this support line as well. Now, could it keep coming down? Sure, it can, but I do have a little bit of time built in to this leaps trade. I have until mid-November, but like I said before, I'm not planning on holding this one very long. I would love for this to move back up within a month and then turn around and sell it. Make that difference in the premium and move on to the next. And speaking of the next, I did do a leaps on IBM as well. And here we are on IBM. And check it out, right? We just had a rough day in the market. Everything dropped. But the fact that it dropped so hard in one day, I just saw that as being a very good potential for a quick little grab of some money, right? We had that huge drop, but I'm looking for this one to hopefully bounce off of this little support right here and start moving back up. But we'll see how it all works out on IBM. And for IBM, I have that 280 call, and this is for mid-November as well. And let's go check out the option chain on this one, and let's just see what it's worth, because I did pay $41.45 on this one. All right, here we are on the options chain for IBM. And as you can see, there's the little P because I have that position on IBM at mid-November, but that is the expiration date that I did select. So let's open that up and let's scroll right on down because I selected the 280 strike price. Now on the 280 strike price, when I opened it, as I showed you before, right here on my order form, I paid $41.45. But if we look at it now, it's actually worth $43.50. So this one, I'm already up a nice little chunk, right? And it hasn't even been a full day. Now that doesn't mean that it's going to continue moving up, and it doesn't mean that it's going to turn around. It just means at the moment, I am up in this play. But am I looking to sell at the moment? Let's go check it out on that stock chart again. And as you can see on that stock chart right here, we did move back up because the low for today was 283.85. Goodness gracious, what a fall, right? Because it opened at 312. Now, I don't know if you noticed or not on my order sheet, and we'll go back to that just for a second because I wanted to show you what else I did there. And you can see right here, IBM, where I did have just 8 shares of IBM that I had bought, and I had a lower average price on that one. And I had set a stop at around 303.64, as you can see right here, with a limit of 303.61. And that's what you call a stop limit, meaning that if it's coming down, I'm willing to sell if that price is within this range. Well, as you saw, IBM was at 312. So I had to stop at 303.64. That's a pretty good amount of buffer between the actual price and my stop. But I did not want it to turn around and take a loss, as my average was definitely below 300 bucks. So I set that stop limit right here, and you can see that it actually did fill at 303.61. And as it came on down, what did I do? I turned right around and I bought those shares later that day at 290.50. So I bought it for lower than I actually sold it for in the same day. So I purchased those 8 shares and I added 2 more shares to get an even 10 shares. And I got those shares at $290.50 per share. But remember, I had sold the previous at $303.61. So it doesn't always work out like that, but when it was coming down, it stopped me out. And what did I do? I turned right around when I felt like it was down and getting to a support level. I went ahead and I bought some more at that new lower level. And then if this moves right back up to $300 and some, I'll set another stop and that'll be another easy $10 per share move. And as you can see already overnight, and that's not meaning that it's going to open at this price, but at the current overnight price, it's $2.95. So I'm already about $5 up on the play. So it's not too bad, right? But I kind of wanted to point that out, that I actually had shares that actually hit my stop, and then I turned right around and bought some shares. And then while it was down so low, I went ahead and I bought that leaps. So as you can see, I had a lot going on, but I don't have to sit and watch the market. I don't have to sit here and watch the stock charts. All I do is I set an alert, and you can see right here, this little bell, that's an alert. That just tells me and dings my phone whenever it drops below whatever I had it set at. And you can see I had that alert set at 290. So when this thing dropped and it dropped below that 290, it alerts me to take a look. So when I had a chance, I checked it out and I ended up buying those shares and then also bought that leaps. So I was pretty excited about this one. And of course, if I zoom back to a 1-year chart and I turn on that moving average, there it is. That's why I don't mind owning shares of IBM, because the fact that those candles want to stay above and keep moving up. And if I look at that 5-year chart, it looks the same, right? Staying above it and moving up. So even if I get it wrong and it drops and I have to hold those shares, so be it, because it will eventually move up. Now the leaps is a different story, of course, because I did buy those leaps, right? And I have an expiration date on those, and theta will continue to eat away at it if it's not moving in the right direction. Now I did this one for mid-November, and I should have pushed it out further, but it would have cost me more money to do so. But it does give you more time for the play to work in your favor. But both NVIDIA and IBM, currently, I am positive in the play, not guaranteed to be positive in the play tomorrow, because who knows what tomorrow's going to bring. But at the close of today, I am positive on both. In that spreadsheet that I was talking about that I am working on, you can see right here. And these are the 2 new positions that I just entered for today. Both on February the 3rd, my NVIDIA and IBM, they are leaps for an expiration date of mid-November. You can see the NVIDIA strike is 150. I paid $48.90. I had a fee of 5 cents, and therefore it cost me $48.90.05. And the IBM, I had a 280 strike. I paid $41.45 per share and a 5-cent fee to do so. Therefore, I paid a total of $4,145.05. Now, since these are not closed, they are both open, I don't have anything on this side to enter in. And the ones before it are green because they are closed. That was my IBM that I did open January 23rd, and that one closed on the 28th. So that one was like almost a week, and I paid $39.75. And I ended up selling them for $55.34. So that made me $1,500 right there. And that was some nice money in just a week. Now keep in mind that expiration date on IBM was out to October the 20th. And I didn't even keep it a week, and I earned $1,500. Now, had I kept it and not sold it whenever it hit my sell point, it would have turned around on me, right? Because it did drop today, because I ended up doing it yet again. So I went ahead and locked in this profit of $1,500, and then I was able to turn right around, do it again, paid $4,100 for it, and we'll see if I can make another $1,000 off of it. And that would be wonderful if I can do that in a week again, but I'm not going to hold my breath because you never know what is in store for you when you're in the market. But that's why on these leaps, I'm not holding it to expiration. I'm not looking for that home run hit. I'm doing base hits, right? I want to buy at 39, sell at 55, and make that difference. NVIDIA, I bought at 95. I sold at 10.5, making $1,000. That's what I'm talking about. Now, NVIDIA, I did make about $1,000, but look at the expiration date on NVIDIA. This was out to 2028, okay? This one here had a total of about 2 years on it, okay? And I paid $9,500 for NVIDIA. So I paid for that amount of time. But when it moved up, I went ahead and locked in the profits. And then I was able to turn right around and do it again. Now, this time on NVIDIA, I did not go out to 2028. I only went out to that mid-November of 26. And we'll see how this one plays out. But as you can see, doing this, how much money do I have at risk? I have, for NVIDIA, I have $4,800 at risk. And for IBM, I have $4,100 at risk. So that's why when it moves up, I would much rather go ahead and lock in those profits and wait for it to come back down and do it again. So if we just slide right over here, we can see on IBM, I actually earned about 39% on just that single play because I earned $1,500 and I only put up $3,900. So that paid me 39% on my money. And then NVIDIA, I ended up getting just over 10% on just that play. So 39% on IBM and 10% on NVIDIA, not too shabby at all. And the last one I wanted to take a look at is on SPY. And if we take a look at SPY here and let's zoom in, you can see that we had that big drop today. It opened at 696.21 and it went as low as 684.03. Wow, right? Crazy drop. But if I look at that 5-minute chart, and here we are on that 5-minute chart, and you can see I had this line here drawn as that was the upper for the previous day, and I had the red line here for the lower of the previous day. So what did I do? You can see right there's that little bell because I set my alert that if it did drop below 689, let me know and I'm going to take a look. And it did, right? It actually dropped right here and then started moving back up. And I thought I might have missed it. And I can zoom in right here so you can see. Right there's that red line. And here's that drop that notified me. And I saw that it was down below it, but then it started moving back up. I thought I had missed it, but then it started come back down as I did have my order in here by then, and it came down and it did fill it. And if we look at my order form right here, you can see on SPY, I had a 688 strike for today. So it expired today. How much did I earn on this one? I earned $1.40 times 100 shares. That's $140 in just one day. So as it did break down below it, I sold that put, earned $140, and it kept going down, right? Now I had that 688 put, but look at it. It's still dropping. 686, all the way down to 684. Now, when I saw it around that 685, I thought, well, it looks like I'm actually going to put the shares this time because it seems like whenever I do sell my put, very seldom do I actually get assigned those shares. And I thought, well, it's about time that I do get assigned because I wouldn't have minded owning those shares at 688 because I would hope to see SPY move back up. as I would love for it to get back into the 690s, 692 area, and I owned it at 688, and then sell a call at the high from today and make that price appreciation along with the premium that it would pay, would have been a very nice day. But as you can see, it did go down to 684, but then started moving back up. It got to 685, 686, and 687, and it looks like I'm still going to put those shares, right? At around 687 to 686, I thought, well, it's very possible I'm going to put those shares. But then it just kept on going. And it ended up moving right back up to the low of yesterday and closed at 689.53. So I did not put those shares because my strike is at 688. And since it closed at 689.53, my contract expires worthless. So I made 140 bucks. I get the capital returned to me in the morning for putting up that capital to buy those shares at 688, and I can look to do it again the next day. So I love it when I get moments like this, because honestly, when it first came out and I drew my lines, right, we're at the top. I really thought there was zero chance of it dropping from a 697 all the way down to 688. I thought, it's not going to happen. I even told my Discord members, I gave them the levels, right? And I stated that I needed to drop below that 688 area or 689. And if it did, I would be looking to sell that put. But honestly, when it first opened, I just didn't think it was going to happen. But wow, did it fall. And we had a hard fall. But you know what the awesome thing of it is, right? Market's going down. The price of the shares are dropping. But what did I do? I made 140 bucks on a huge red day like today, right? I made 140 bucks on SPY. So these are a lot of fun, and it can be fun because I'm using a stock, in this case an ETF, that I am not worried about for the long term. Worst case is it closes below 688. I put those shares, and I now own 100 shares at $688 a share. And if I start getting worried, all I do is I zoom out. And I zoom out to that 1 year and just look at this, going up. And then I zoom out to that 5 years and look at this, just going up. So to me, that tells me over time, even if I happen to catch it right here and it's dropping down, it shows me that all I got to do is give it a little time and it should recover. Now, of course, none of this is financial advice and none of this is guaranteed. I do stand to lose money anytime that I buy shares of any stock or ETF, just as anyone else. And since I don't have that crystal ball, I don't know what tomorrow brings. And that's why I like to look at the history, and it give me a little bit more of an assurance that this could work out well for me. But I don't know about you, but I had a great day today. Even though my account was going down due to the fact that SPY was dropping and a lot of other stocks were dropping, I turned it around, made some money in a day, and also bought a couple leaps that I'm hoping turns around and makes some very good money in the near future. I think I'm going to wrap it up right there. If you don't mind, hit that subscribe button, smash the like button, as it would be much appreciated. And as always, I am not a financial advisor. This is not financial advice. Please do your own due diligence before you get into any stock plays. And until next time, Legend out.